Hey folks, welcome back to Challenged. It's been 4.5 years since I started my experiment where I took a mortgage out on my house in order to invest that money into the stock market and hopefully let the dividends and the interest that rolls off of it pay for that mortgage, just to see what happens. The goal is that after that 30-year mortgage is completely and totally paid off, I have a nice big portfolio of stocks and bonds that just add to my investments. Let's get into the numbers. So I took a 30-year fixed rate mortgage at 3.125% out on my house for $200,000. That at the time, this was back in 2020, represented 1/3 of my house's value. I didn't want to get too crazy and over leverage everything, so I stuck with that 1/3. But it still gave me a nice healthy pot that I could put into the market and see what it does. Especially, this is right after the flash crash of the big pandemic time, so everything was down at that time. I invested in a mixture of common stocks, preferred stocks, and baby bonds. Wanted to keep it pretty well diversified, so I didn't have too much money wrapped up in any one thing. Here's a list of everything that I've had. If you need to, go ahead and pause the video if you want to see what I had. But you got to remember, my cost basis was based on the time that I purchased those stocks. And of course, some of it was purchased back then, and then the rest of it has been purchased since then. In hindsight, I kind of wish I would have gone much, much heavier into investing right as I got the money. I thought we were going to have some sort of a double dip crash on this whole thing, but that pandemic meltdown in the market was just kind of a one-time deal, and then it just shot up. Regardless, I was a little bit slow in investing this. I think it took me at least 2 years to get everything invested. And as we know, from 2020 on, interest rates started rising. And of course, that meant that you could get much better yields on baby bonds and preferred stocks. And of course, all I'm trying to do is offset the cost of the principal and interest payment that I pay on the house mortgage. That's the main thing. This whole thing needs to be able to pay that mortgage. And I want to add no money of my own after that point. So if you're wondering how it's done since then, again, let's get into the numbers. I took out a $200,000 mortgage, but I did not get to keep that whole $200,000. There were fees of getting the mortgage. So I actually had $197,460 that I could invest. And like I said, I have since invested everything in. And at this point, I've actually invested more money than I originally had to be able to invest. And that's because the interest and dividends that pay off of this invested money get reinvested into this. So I have $201,229 that I've invested so far, which kicks out $16,968.83 annually in interest and dividends. My monthly mortgage is only $856.75. So when you divide that annual dividend by 12 to get monthly, I'm actually bringing in over $1,400. So that's kind of the beauty of what's going on here with that very, very low interest rate and the fact that so much of what I have is paying a high interest rate. I more than offset the monthly mortgage, and I get to reinvest all of that. And so this is 4.5 years. I'm at $201,000. I'll be really curious to see how that keeps going. There are some more interesting things to look at with this. So I've put $201,000 into the stocks and everything that I've bought. That's my actual costs going into it. But it has been over time, and it's a lot of those that I bought a long time ago. And so they have increased in value. And my actual portfolio value is worth $219,593. So there is a spread between what I spent and what it's valued at today. The other nice thing is that I am constantly paying down every single month that mortgage. So I started with a mortgage of $200,000. It is at $181,320 as of today. So as every month goes by, that spread between the value of my stocks and what I actually owe on this for that mortgage continues to widen. And because I am bringing in more dividends and interest than the mortgage actually costs, I get to reinvest all of that. As with any investing, it takes time. And of course, it's only 4.5 years into this 30-year experiment. And I'm going to keep making these videos as time goes on. It may be twice a year, or maybe it's only once a year, but I think it's pretty interesting what happens as the time goes on, how that spread between the value of the stock and what I actually owe keeps widening, and that safety margin in there keeps widening. Regardless, I'm having a lot of fun with it. If you guys wouldn't mind, hit that like button down below, as well as subscribe. Stay challenged, my friends.